get a cleaner idea about what the market is gonna do next. So always keep this futures chart open. It will tell you a lot more about what you are doing. About price action and volume action. So what we are focused on is the volume action, right? There are about 3 elements, okay, which go into the makings of a chart. Price, the most important one. Supporting one is volume, and the second supporting one is time. Okay, and at different place, different days, different times of the session, and at different days of the week, each of these 3 play differently, right? So you know that between 2:30 and 3:30, because of the option plays and because of settlement pressure, because of this particular time, 2:30 to 3:30, the market works differently, right? And that point of time, the time becomes more important than price and even sometimes volume. But at certain times, let's say about 9:15 to 10:15, the volume component of the market is more important. A lot of traders are brought up into thinking that price is everything, and that concept is still there. Bhav Bhagwan Che, But Bhav is not the only Bhagwan. Bhav is not the only Bhagwan. There are 3 Bhagwans. One is price, one is volume, and the third one is time. And if you can pay attention to these 3, especially as a derivative trader, you will cut out a lot of mistakes, okay, which you make in derivative trading. The whole idea as retail traders is to eliminate rookie mistakes. Before you start making money, before you actually become profitable, you have to think about how you're going to be eliminating your stupid mistakes. The question is, okay, what time frame is best, okay, to monitor the 10-bar COT? Whether you trade a 1-minute time frame or a 3-minute time frame or a 15-minute time frame or the 30-minute time frame, the most important time frame in the market is always the higher time frame, right? So the monthly chart is a little bit more significant than the weekly chart, and the weekly chart is more significant than the daily chart. And the daily chart is more significant than a 60-minute chart, and the 60-minute chart is more significant than a 30-minute chart, right? So it flows from there. The higher the time frame, the more is the weightage of the market, right? Now, why do I say that? Is because 1 bar of 3 minutes or 1 bar of 1 minute does not make a market, right? A lot of people, what they do is like they take a signal, okay, from a 1-minute bar, and whatever signal it is, a moving average crossover or an RSI or a MACD or whatever, okay, they look at and they extrapolate that and they expect that result, okay, over the next 5 days, 5 weeks, 5 months, and 5 years also, right? There's nothing, okay, like that ever in markets. We have something called the rule of 10 bars. Whichever time frame, okay, you're looking at, hold that signal, okay, for the next 10 bars also. So if you got a signal, say in a stock in the monthly time frame, that signal is valid, okay, typically for the next 5 months. Okay, if you have a signal in a weekly time frame, that signal is typically valid, okay, for about 4 or 5 weeks, unless something changes to upset, okay, that signal, or something contra happens, right? But that is a holding period. So same thing, okay, if you get a signal in a 3-minute chart, don't expect it to hold for the next 3 days, right? The validity of that signal is 3 minutes into 10 bars, that is 30 minutes only.
Good evening, everyone. Good evening, guys. A quick sound check. Great. Welcome, everyone. Welcome to this 5 p.m. session, and hope all of you had a awesome trading session. All of us at VMR did have one, and we were expecting a big move in the afternoon based on what we saw from morning, and we were rewarded with some good profitable trades in the 2 p.m. Slot onwards. So anyways, today's session is first starting with the options table. We want to focus on the options table and explain what all features are available on the option table, and from the option table what all can we go to. So we have a goldmine of information on this option table, and what I have done is I have brought this timeline to the open of the day today. So while we are doing a review of what all the option table offers, we will also go through what happened in today's auction and how we could follow the same using this uh, options table, how we could follow the open interest which was building up in the 25,000 combo, the call and the put, because that was the gamma zero. So starting with the option table, the top table is self-explanatory. We have the Nifty spot and future levels. We will concentrate only on Nifty for today so that I'm able to explain all that is available in the option table. And before we move on to a Bank Nifty focused one on in a separate session. So we have the Nifty spot and futures levels uh, at the top, and we have the VIX. Then we have the gamma zero. The gamma zero is where the highest uh, inventory of the current weekly settlement is placed. We also have the range, spectrum range. This is the gamma wall range, which was 2500 to 24900 at the open today. So we have the series VIX, we have the VIX range, expected range as per the VIX, and we have the PCR, which was zero point 0.6 at the open today. So it was not at all bullish to start the day with, and it looked as if after the open, which was an open auction, we would continue to form a balance at 25,000. And you can see the gamma zero. Based on the gamma zero, we can have a look at the straddle chart of that combination. So how do we open the straddle chart? Before I go to the straddle, let me just run through what all uh, is there in the options table. After this top table, then we come to the main options column where we have the calls clubbed on the left and the puts on the right. The middle part is the strike price, and the strike price, the middle column of the strike price contains two icons. One is for the market profile chart, which you have that ABC icon next to that, and one is the line chart. So we will go to both the market profile and the line chart, and we'll focus more on the line charts of how we can use line charts in options, both in straddles as well as individual strike prices. So this is the middle table will give you the straddle chart, market profile chart of that particular strike price. And on the left side, we have the calls. What all do we have? We have the price max OI and minimum OI, open interest of that particular strike price, the call on the left. And then we have the total open interest with the change in open interest. So yesterday we can see 25,000 call added 2,63,000 of open interest. And the total OI at close yesterday was 4,52,000. So this is what information we get on the call side from the left. And to open the market profile chart of the call or the line chart, we have this icon over here in the change and last traded price column. We have similar two icons. One is the ABC, which will open up the market profile chart of whichever call strike you want, and the icon below that is the for the line chart. So we will open these chart and we will see how they function before once I go through the all the legs in the option table. So this runs down to all the strike prices, and we have very important market profile based references marked here, which is the VPOC and the VWAP of that particular strike. So why do we have this marked? Because if you're especially on settlement days, they give us a lot of important cues, because this POC and VWAP are the references for the writer to prevail in that particular strike price. If the price of the option, for example, the current price is 60, is above these two, then the writers will not be attracted to it, or the writers may be forced to come out. So that is why it is very important to have a look at this VPOC and VWAP, and this will change as the time changes. This is at the open of today. So 65 and 58 was our reference. And similarly, on the right hand side, we have the put based data. So we have the put 25,000 put VPOC and VWAP, and then we have the volumes traded on that day. So the volumes in orange indicate uh, highest volumes of that day in that particular segment. So on the put side, 25,000 put and 24,900 put were the ones which attracted highest volumes yesterday. So on the call side, we can see the orange volumes are only here, down here at 25,400 and 25,500. So you can see how the orange volumes are indicative of highest volume being traded in any particular strike, and they could definitely be uh, writers who were getting into this far away call option. Whereas on the put side, 25,000 and 24,900 were where the volumes were focused uh, as of yesterday's close. So we have the open interest, the day change of open interest column, and similar price, max OI and minimum OI. How does this max OI and minimum OI help? I will give you the example of today how that both the call and the put in the 25,000 strike was adding. The put did get one small swipe around the 11:30 mark, I think. We will have a look at that also, where it did give a dip, but again, once that swipe got over, it again started to increase. So the OI in both started rising, and the 25,000 straddle seemed like everyone is entering it. Although the premium was not decaying that much, the combo was not falling, and we had discussed this in the room today. And Shai had mentioned that it does not look like a short straddle play today. So it is better to wait for the opportunity and be prepared in the afternoon to go for a long gamma trade. So that is what we happened, and the gamma, as you all know, was at 25,000. We will see how the trade played out today with the line chart with us, both the straddle and the strangle option line chart. So how this OI helps us, the max OI and minimum OI is, we can go back in this time frame, go forward in this time frame, and see where the highest open interest was. And for example, if I pull this back to the I period today, we can see how the 25,000 put, which was just 2 lakhs at open, has the open interest has gone up to 7 lakh 73,000. So that means a whooping 5 lakh 93,000 contracts have been added today. And if you look at the call side, even more, uh, the open interest is at 8 lakhs, whereas 3 lakh 52,000 has been added on the call side. So this is how this timeline helps us to go back and forth and see how it is, uh, where the open interest had come in and where it has got the max pain. And so I'll come to the line charts in a bit. Before that, we will want to show how we can open the straddle and the strangle charts using the option table, and both the line chart as well as market profile. As I mentioned, the middle column where the strike price is there has two icons. So if you want to open the market profile chart, it's a single click uh, move. You need to just go to the strike price and click on this icon, and the market profile chart of that particular straddle will open up in a new window. So you can see if we take off this J, this straddle was looking as if it is going to go down. We left an A period selling tail, and we are staying below this value. But we got this swipe in the E period where I was talking about how the 25,000 put writers got one hit. But post that, it again started to accumulate. And then we went on to make new lows in the I. But then what followed in the J period, when it went up above the VWAP of the straddle, definitely once it is going above the VWAP of the straddle, one of the call or the put writers are going to get a hit. And that is what happened. And what it did was, it not just swiped up these two values and hit this POC, it went on to scale above this highs of 5th September and make a high of 420. We are almost close to hitting this VPOC of 453 on the straddle chart. So this is how we look at the market profile chart of a straddle. We open a market profile chart of a straddle. And if the same thing, if you want to look on a line chart, we have the icon depicting the line symbol, and we just click on that. So what I'll do is I'll just So you can see this is the open today, and this is what we were talking about. And we can take off these or add or take off the indicators which you see on the screen by clicking on the icons below. So if you don't want the OI spike, you need to click on this. If you don't want to see the IV, you click on this, the open interest, the VPOC line, and the VWAP line. So clicking on the icons at the bottom, we can get that particular indicator to show up or uh, disappear. So you can see how this blue line, the open interest, which started at around 666,000 contracts, continued to rise all through the day. I have this chart only till 145 for now, showing you how this open interest was building in this chart, how we can see that in the line chart. And this POC and VWAP, as I mentioned, are the indicators whether the writers in this straddle are at ease or are little bit edgy, because all day this straddle was going up and down the VWAP and the POC. You can see there was no one steady decline, because generally what happens when it's a short gamma day, the straddle premium keeps falling. The straddle premium keeps falling, and it remains below the VWAP and the POC, and the POC also keeps shifting lower. But that was not the case today. So which is the reason we were not very comfortable with a short in the straddle, and the premium was not at all falling. The decay was, premium was not there in spite of it being the expiry day. So what then happened, it did begin to fall later at 1 o'clock. You can see how this started to dip, and how we can see that, and how the OI also started to build up. So then I'll just take it further, and here just before this move, so here you can see how the POC and the VWAP of this straddle are at 122 and 118. So these straddle writers are now comfortably placed, because if they have written around the 130 mark at open, you have these, all of them in a good space. But again, once it gets about these two references, then the writers will be in trouble. So that is what happened. And once we got that green bar at 2 o'clock, this one, this was the first indication that the writers are going to get hit. Once the bar gets above the VWAP and the POC and remains above it, then that OI will have to come down. And you can see how beautifully the price remained the VWAP, it kept making higher highs, and the OI kept falling into the close. So from an OI of almost 18 lakhs, and we saw that in the option table where you had 9 lakh of call open interest and 8 lakhs of put open interest, just before 2 o'clock came down to below 10 lakhs. So this is how you can view the straddle line chart and see if that straddle on a particular day is being written, and if the writers are being rewarded. Because today there was certainly no sign, except for this one half an hour phase between 115 to, you can say, the 45 minutes phase, where the premium actually decayed. But whatever decay happened, it got negated in this one bar at 2 o'clock, and after that it was just one side move on the upside. So this is how we open the straddle chart. And the straddle chart, I will again once again show how to go to that particular straddle. And before that, I would want to show how to open a strangle chart from this options table. So in case of a strangle, for example, we had the gamma 0 at 25,000 and the range was at 25,100 and 24,900. So in case we want to select the 25,100 put, so we have this checkbox which we need to click, which I have done now. And on the put side, we would have to select the strike of 24,900, which is this. So once we select the two legs, we will get that option at the bottom of the screen, confirming the selected option pair. And you have this option of opening the chart. By default, the chart which opens would be the market profile chart. But from this market profile chart, we can always go on to see the line chart from this. So this is how you can click on the line chart and you will have the line chart of that particular strangle, 24,900 put and 25,100 call. So I'll just give it a bit of time for this to load today's data. And this is how you can follow the open interest, how it is building in the strangle. And I'll once again open the market profile chart so that we can at least have a look at what the market profile was showing us today. So you can see we had a open below the previous value, and then similar E period swipe where the put got hit, and then we made those new lows in the I, and from the J period there was no looking back. We went on to tag these unvisited VPOCs of 166 and make a high above this 5th of uh, September selling tail. So this is how you can watch the line chart of any strangle. And coming back to the options table, so this is how we use the option table. And when we are looking to go long options, typically we will look at least a 100 or 200 point in the money option. So we were looking at the 24,800 call when Nifty was trading at 25,000 and 25,200 put for signals. So we open that particular profile chart by clicking on this, and we can also open the line chart of the same. So it's a single click where we just click on the market profile chart and it opens up. We can also have a two window mode, going on the top right, clicking this two window mode, and you can have the market profile on one side and you can have the same 24,800 call option line chart on the left, or the order flow chart on the left. So I'm not sure why the line chart symbol is not coming, but we can always go to this and click on the line chart. Okay, I think because this is out of the money, the line chart of that particular option is not opening because we have closed at 25,300. So this is definitely out of the money. Let us try opening the 25,000 call line chart and see what happened today. So how do we see the line chart and how do we trade options using this? So we've had a session on this before, but I would just want to revisit the importance of using this line chart and how we can depict the probable targets, and how this POC and VWAP of line charts give us lot of important references. So we just have a single day over here. We can push it back to the last 6 days, and we can make a note of where the POCs of the last 6 days have been left. So the option has come down in this call. So we have the highest POC at this 323 level, and then we have one at 276, and then one at 129. So these are the higher, the 129, 276 and 323 are our references of the POCs which are higher. Why are these references? These are probable objectives which we can look for in this option when we get a up move. So today at the open, if I show you the chart till the 2 p.m., you can see how the open interest kept on building in this. So at the open interest was 4.5 lakhs, and then around 150, we can check that in the options table. I will click this to the last part, and you can see how the 25,000 call max open interest was 9 lakhs 4,000 at 143. So in the line chart, we can see this 9 lakh 4,000 at 143. This is the highest OI in this call. And at that point of time, the POC and the VWAP was at this reference. The same thing we can do this because 145 is what we need. So we go back to the 145 slot, and when we see this 25,000 call open interest, you can see it is matching 9 lakh, and the star is shown because that is the highest of the day. All these stars indicate the open interest is the highest for that particular day. So as the open interest keeps rising with every TPO, the star will keep getting retained. And the same thing you can see on the put side, 8 lakh 28,000 was the open interest, 6 lakhs of open interest was added today. And you have a star here that is showing us even the put side was building in this 25,000. So let us check the 25,000 call and see where it actually gave a move, because it was just uh, forming, swiping around the VWAP with the open interest rising, but it was not giving that good a move. And in the options table, we also look at where the POC and the VWAP are 59 and 55. So above 60, these writers would be started to feeling the pinch. And this 2 p.m. bar, once it got above 60, you can see it was with a dark green bar. Then the writers had no option but to get out. So this kind of a signal in the options line chart is telling you how you need to take a long position here. What will be the stop loss? The stop loss would be the low of this bar. We also watch the order flow of these options, so we get even more precise levels, but the line chart is telling you that now the writers are getting hit, and this is our typical Dukan trade. From this move above 60, this call I think went on to make a high of 400. And as I was mentioning you, the targets of this swipe would be based on the previous POCs. So that 276 and 323 were our initial targets, apart from that 177, I think. And once it hit that POC, it is always better to book out and or trail as per the latest green bar. So you can see how the open interest from 9 lakhs came down to around 2 lakhs into the close. So the open interest was lesser than how it started the day. The open interest at the open start of the day was 4 lakh 52,000, whereas overall, if you see from 9 lakhs, we have shed around 7 lakhs of open interest. So all these writers were taken out and we got this typical Dukan trade. And this Dukan trade you could have seen in all the call prices today. If you see, I'll just go to the close and we can see how 25,100 call, the max open interest was at 158, which was 9 lakhs. In fact, it was more than what the 25,000 call had. And it came down to 5 lakhs. So if we open the line chart of this 25,100 call, so you can see how at the similar time this got above the VWAP and the POC, which was at 30. So for 25,100 call writers, 30 was that mark. So at 30, if we get a IB signal, initiative buying signal in the order flow, that means those writers are going to rush. And see, you can see this from open interest high of 9,67,000. It has fallen to 4,09,000. And why it is 4,09,000? Because these are the writers who have written before and at a higher price. So they are still safe, or maybe they have added on the put side. But all said and done, our objective is this. And if you look at the higher VPOCs in the 25,100 call, you'll be able to figure out that the objectives of this call were as per that POCs which it had left. So 242 was the highest POC which it hit. So we can do a similar touch in the 25,000 call also. So this is a similar thing in the 25,200 call. So open interest was at 7,58,000 and it fell down to 2,85,000 into the close. So we can have a check of all the open interest data in from this options table, and we can see how much of open interest was there at how much of time. We can see how much max OI was there in any strike price, and in comparison to that max OI, what is the OI now, and where is the VWAP in the POC. So below this, the writers are in control. Above this, we can look for a Dukan trade. So I'll just take the couple of questions which have come in. There was a spike during 11 a.m. So that's what I was mentioning. Let us have a look at the 25,000 put, where we did get that move at I think 11:30, and you can see how the writers fell. I'll just zoom up the chart to that particular time frame. You can see how the open interest was building up here in that put. At 11:30, we got that move above the POC and the VWAP. So what it does is, see, that is the reason we have the previous POCs as our references. So we will have the objectives of any move which come as per the writer's squeeze out. We will look at what is the POC it is tagging. So you can see this 113 was the prior POC, which was one of the objectives for that 25,000 put, and it made a high of I think 120. So it was not able to sustain above this POC. So this swipe had one target which was hit. If it would have stayed above this POC, then we would have looked for higher VPOCs, which happened on the call side. So when we saw the call side, you can see how the green bars continued to come, and at no point of time we came back below VWAP. But here, just after that one big green bar in the put, the auction sustained. And why that happened? Because we could see in the order flow chart, Nifty futures did not get fresh selling in that swipe lower. So options table is just one part which gives us all the data regarding the options. We have the open interest, we have the VWAP POC levels, but we follow the Nifty futures for our main signals. So when this swipe to 120 happened, so we immediately saw in the Nifty futures chart, I'll just open that so that we can have a look right away on the 30-minute order flow on the Nifty futures, how the selling side did not show any volumes and how we got RB signals. So this is that swipe which happened in that P, and you can see the number of zeros on the sell side over here, and you only have buy side numbers. So this at 11:15 was very clearly telling us that there is no supply coming into the auction, and this was our basis that the put writers, it was just a swipe, and from here on the put started to accumulate again. So this is how we see and combine what is happening in the futures along with the options. Yes, another question was how many monitors does one need? We can start with 2 monitors, and what you can do is you can have multiple tabs. You can also make use of this 2 window mode which I showed you. You can have the open interest on one side, you can have the order flow on the other half, and monitor both. Once you see, so for example, when we were seeing this 25,100 line chart and we saw that auction getting above that VWAP and POC of 30, we can open that 25,100 call order flow and see what if it is showing us any IB signals. So we have some awesome features here. It is up to us how we make best use of that. So you can see this bar of 2 o'clock is where it started. So let us go to the 2 o'clock order flow bar and see what it is showing us. So this is the 2 o'clock bar. So in fact, a bar before the 2 o'clock itself, we got an IB bar, and this IB close, which closed at around 50, was a clean buy signal, and the stop loss would have been the IB low, which was 14. So this is how we watch. We can use this dual screen mode in the options and watch the line charts and the order flow chart, especially on expiry days, to get some good tradable uh, views. And once the order flow is showing you an IB at VWAP, and with so many zeros, it is very clear. This bar is very clearly showing all the writers are getting hit. So that is how you need to make use of this. And once you enter book part, you trail to cost, or you just keep trailing to the POC of the last green bar you get. So which in this case is this 58. And then you got this fresh IB. You can make low of this IB as your trailing stop loss. And you then just hold on with, then you get this one more green IB, you'll trail to this VPOC. So any NPOC's lines of IB bars, you keep trailing them as your trailing stop loss. So this is how you, that keeps you in the trend. So this today, what we got in the afternoon was a big move, and that is it is important for us to hold one part at cost and keep trailing. So when you're getting these NPOCs lines and IBs continuously in one direction, you need to make most of it. This would have been our last TSL, which I think was the uh, final one which held. So this is how we can make use of this dual screen mode and look at making most use of whatever real estate you have. So two monitors, one system plus one external monitor, I think is basic what you can start with. And if you can then extend it, you can look at adding some more screens to your setup based on what instruments you trade and what options you are looking at. So we have covered the line charts, and we have covered the how we use the VWAP and the POC and look at taking trades in the line charts. One more important aspect what we have, and where this all begin, why we are discussing the gamma zero thing, is this NTM OI chain charts. This is a very important feature which also shows us the spectrum. Spectrum is the range for the current weekly expiry. So we can adjust the timeline on this. So if we go to the start of the day, you can see, and what I'll do is I'll rebuild this chart. So this, the Nifty spot chart is the candle. I'll take off the all the other indicators, and we'll focus on it one by one. So this is the spot price. This is the spot price, and then we have the gamma wall low and the gamma wall high. This is the spectrum range. This is what we saw in the option table at the start. So if I go back to the options table, and the open of the day, we have this 25,000, 25,100 as the gamma wall range. The upper range is 25,100, 24,900 is the lower range. Gamma zero is at 24. So this is the gamma upper range, 25,100, 24,900 is the lower range, and gamma zero, which is the dotted turquoise line, is at 25,000. So this is how we started the day. And what next we have in this is the call open interest OI change. This is the green line. This shows us how much of call open interest is there. And this pink is the put open interest. So as we go up, and this MVIS high and MVIS low are based on, if the spot is above the MVIS high, it is bullish. The spot is below the MVIS low, it is bearish. So we will not have the MVIS lines for now, and we'll just concentrate on this gamma spectrum range and the gamma zero level. So you can see how here you can see how the open interest in both call and put was rising, because you can see both the pink and green lines going simultaneously higher. It was only here from the 2 o'clock 1:30 mark where the call started to fall. In between, at this point 11:20 is where we got the drop in the put open interest. This was the swipe which we made in the E period in Nifty futures, where the put open interest made a dip. But once later in the day we got that move going higher, this call open interest began to fall and the put began to rise. So what does this say? When the OIs of the call and the put are deviating from each other and expanding, that is telling you that you have a trending move on in the market. So that is how you need to look at it. So this was very clear that you needed to hold on to long positions if you had taken a long call after that move at 2 o'clock. because the open interest continued to expand into the close. The call kept falling, the put kept rising. So this is how you read. And here the gamma range also from till 2 o'clock it was same, it did not change. From 9:15 to 2 o'clock the gamma range was 24,900 to 25,100 with the gamma 0 at 25,000. So once that move started, it went on to first the gamma 0 moved to 25,100, then to 25,200, then finally to 25,300. So this is how you follow the spectrum chart, and it gives you a very good overview of what the inventory is doing for that current weekly settlement. And you also get to see how much of what OI is being added for the day. And in fact, using this spectrum range, we also look at taking that particular strike as our long option trade. The So in the morning, I mentioned 24,800 was the call we are looking at, but 24,900 also was a good strike to look for long side trades, and 25,100 was a good strike to look for long put side trades, provided we get those signals in the order flow. So the spectrum is also a very important feature. And on expiry days, what I do is I have the spectrum on one side and I have the spot chart on the other side, because the spectrum range is based on spot. So on weekly settlement, it helps to have this handy so that we can see if the spot is giving us a move, it will definitely show up on the spectrum. So you can see how in the morning we had this high of 25072 and we had this selling tail at 25056. In fact, this was telling us why we had that VWAP and that POC combo of 25,000 call around the 60 level mark. So once this spot 25055 was taken out, that call got above that 60 level and it gave us that move higher. So you can see once it gets above this is when you can expect the call also to give you a move. So this is how we can use this spectrum chart in sync with the spot, or you can just have it as a single spectrum chart open, which gives you a lot of information regarding the open interest of call, put, and the range. So coming back to the questions. Shiva has a question, IB plus IB or IS plus IS. Yes, those are our standard order flow rules where we look to take trades on the shorter time frame. Our bigger bias is definitely the 30-minute order flow, which we look at. 30-minute order flow helps us to form the bias, and we look to trade in that direction using the 3-minute signals. And what I showed you today are typical Dukan trades. Dukan trades are happening because of option writers getting hit. So for a Dukan trade, one good IB at VWAP or the POC of that option is a good enough signal for you to go long. And what you can do is on Dukan trades, you can come down with the time frame. Instead of having the 3-minute, you can wait for an IB to form on the 1-minute bar and take an entry, because you get the earliest entry and your risk also reduces. We have a question from Rajat, LLT order size. So LLTs, just LLTs do not give you a trade. LLTs along with the bias should be in sync. So today when we got that move higher, we got a 4,000 lot buyer at 25,118. And we also saw option writers getting hit because that call got above 60. So it is a combination, everything fell into place, and we saw that huge 4,000 lot buyer which was not then taken out. After that we kept getting greens. So I'll just go to the 30-minute order flow chart of Nifty at the close and show you that. And also in Bank Nifty we saw a similar thing happening in the afternoon. Yes, we do have an FA confirmed at Nifty in Nifty futures at the lows, and it has already completed the 3 ATR move on the upside. Sumit, what you're talking it about is only the end of the bar chart. So if I just pull up the 30-minute order flow chart, you can see how we were discussing about now supply coming at the lows. And then here in the 2 p.m. move, we can see how this big move higher. We got this 4,000 plus seller at 25118, and the auction never came back below this, and we just kept going higher. You can see the caught of this bar at 13,000 green. So we had this green caught building up right from open. We had caught even green even on yesterday when Shai had specifically mentioned the shorts seem to have booked out, and we had a green caught, and definitely a big move like this will get profit booking. And what you see here at the close is more of profit booking which has happened from the caught which is accumulated from uh, morning and yesterday. So all said and done, it does look that it may give us a bit of a retracement because we did have some good red caught, but certainly this is not a point to go short, because to short we need an IS along with the red caught. So red caught 10 bar caught being green, you need an IB to go long, and 10 bar caught being red, you need an IS to go short. So I've already answered this question. When the market spike, caught was very much green. It was only later when profit booking came in when the caught started turning red. The ATR values are available in the option chart. So we are already looking, we have already got confirmation of buyers coming in at the lows when we made this new low. And once we get above VWAP and we get this IB, we are looking at the 30-minute time frame. Even if you look at the 3-minute time frame, if you're getting an IB signal with green caught, we go long with the stop loss of that IB bar as the low of the IB bar as the stop loss. So we have very hard pressed rules which we go by, and we follow the process every day, and it is working for us, and there is no reason why it shouldn't work for you. Three-minute had IS at the close, definitely they will have, because there was good profit booking into the close. We will have to see what the opening volumes are tomorrow. We can get a retracement down to 25270 in Nifty futures at open, but the today's trade was only going long at the 2 o'clock show. We do not take random trades just because the market has gone up and just because the caught is red. We have a process. We look at the caught, we look at the order flow signals, and we look at the market profile references, and accordingly we look to take trades. Yash has a question. Suppose we have an IB plus IB in options but no IB in futures. Yes, Yash. Sometimes you do get option based move, but today what happened was a futures based move. But yes, in options what you do is you do take the trade based on the process, and you will part book immediately and make the trade safe, because the target and the range will be more if IB signals come in both futures as well as options. So if in options you're getting, it may be a small swipe, like what happened in the put today had a similar kind of a move which faded very fast. So we have all these charts live, and we discuss all of these concepts which I have been explaining to you: the market profile, the order flow, the options table, spectrum. We follow the gamma zero and the open interest of both the call and the put in the VMR, the V-Trender mentoring room, where all of us sit together and discuss these situations and look for probable trades. In fact, when we got zeros here in the E period, all of us were very much, we noticed, we sat up and Shai mentioned it, zeros on the sell side. So after that we were only looking for a IB to come in. So and look for the long side, and we were definitely expecting a neutral extreme day, which we knew because we had left a good nice buying tail at the lows of A. So if you want to speeden up your learning curve and get used to using these methods and concepts on a daily basis, do suggest you join the VMR, the VTrender trading room. You can log on to our website and check that out. We have lot of awesome features, and which we have explained in this video to a certain extent. And any other queries you have, you can message me on Twitter. The X, my ID is at Uttam Goel. I'll be happy to answer any queries regarding whatever we discuss in these sessions or regarding the VMR. So any more questions, guys, before we can sign off, because it has been time. Yes, Rajat, we do have, that is what I was explaining. We have that on the website. It is called the VMR, VTrender Mentoring Room, where you not only get access to the trading room, where all of us traders are live and discussing the market. We have a running commentary which is happening. You get access to a 15 video training library, which explains all the setups which we are using. And then you have the premium plus subscription on the VTrender charts. So in VTrender charts, you have access to the market profile charts. You have the exclusive option suite and the spectrum range which I showed, and you have all the order flow chart access of futures as well as options. So in case you do want to get better at this, seriously will suggest you look at that option of joining VMR and then take your trading to another level. Yes, it definitely requires efforts from your end. It is not going to be an easy piece of cake. You will have to put down your head, go through the training library, go through the process, understand the process, and then put in efforts on a daily basis to identify the setups on in live markets and take trades. So that is it for today, guys. Thanks for joining in, and wishing you all a great weekend. Let us get back to the market weekly review on Monday, and let us all hope tomorrow also we have a good trading session. We only look at Nifty futures and Bank Nifty futures, and on settlement days we do have a look at the Fin Nifty options, because these are good enough for us to get some good trades on a daily basis. So we don't look at stocks for trading, but the concepts which are explained in the training library work on all liquid instruments, so you can apply them, and you have the charts available for even the stock futures and stock options also. So thank you all. Signing off for now, and let us join up next week.